Well, I'm delighted today to be here at the Park Hyatt in Dubai with Nick Rowles-Davies from Lexolent. Welcome, Nick.
Thank you for having me, David.
So we're going to talk about the Lexolent platform, why it's of interest to investors, why it's of interest to the professionals in our community. But first of all, it'd be great to get a little bit more on your background and how you got into this area.
Sure. So I've been a lawyer litigation lawyer for 30 years. I came out of full-time practice some time ago, 2010, and have been involved in litigation finance for all that period since then. Been involved in a number of different funds, different companies, both public companies, private companies. And ultimately, maybe 18 months ago, decided on a change and decided that there were probably some things I needed to think about the industry that maybe could be changed. And that led me to look at Lexolent. I had a lot of approaches from investors that were looking to do things a little bit differently in terms of litigation finance and how they access the market. It's an interesting space for a lot of investors, and so that's where Lexolent came from. It was me thinking, trying to deal with some of the inefficiencies, but at the same time trying to cater for the needs of those investors that expressed an interest in doing something slightly different from that which they were doing before.
And who might these investors be? Private individuals, institutions? What's the sort?
It's a combination.
Yeah.
Initially, it was what I'd refer to as limited partner investors who'd come into litigation finance funds in an LP-GP structure, but that then changed to high net worth individuals, as well as single and multifamily offices. So a real range, and then ultimately, as time has gone on, it's the traditional litigation finance firms have also expressed interest and become involved in what we're doing. So the real broad range of all.
And so the family offices might be looking for some less correlated or uncorrelated investment, might be looking for an income play, or what is it that they're looking for when they're coming to you looking at
Well, certainly litigation finance is an alternate that, in the old days it was litigation finance or life settlements, which did you go into? I guess these days the returns across litigation finance have continued to be high. Even those big funds like Burford Capital, who invest in a range of different types of investment, are still maintaining very good IRRs. So I think the attraction is it is non-correlated. So ultimately, whatever the market does doesn't affect what litigation finance does. It has its own microcosm. And the reality is that if you invest carefully and cleverly in litigation finance, the returns are very high. So that's definitely the attraction for certain parts of certain people's funds.
And the returns will still be there in the event that the interest rates are going up now. There's greater returns on cash, on fixed income, but the margins here and the investment return is sufficient.
It is, because what goes on in a courtroom or an arbitral panel is not affected by the political nature of the rest of the world. So whatever else is going on in the markets, if the market is up or down, doesn't affect that particular investment. So it's entirely non-correlated and doesn't get affected by what's going on. So it's always going to be potentially a very high return, as long as you get it right, of course. I mean, there are some dangers. It's a binary. In the main, single case investment is binary, so you can lose your money. Most investments are non-recourse, so if you don't win, you lose your cash. But sophisticated and experienced managers of money in litigation finance are building portfolios where their concentration risk in certain jurisdictions or certain types of case is
diversified.
Yeah, it's totally diversified.
Yeah.
So the reality is that it's a good asset class to invest in.
Okay, so just taking a step back. So you mentioned there you'd had a broad career, you'd worked in different parts of the litigation arena. How did the idea come together and the team around this new venture?
It was a combination of being approached by different investors that wanted direct access. So historically, the investors that I was starting to talk to when I first thought about Lexolent, they were investing into funds. And of course, that brings with it, you have to give away some of the carry to the manager, obviously, and you pay a management fee. And they were trying to diversify how they were getting into their investments in the asset class. So they wanted to do straightforward LPGP investment, but at the same time wanted to come direct into funds, into cases. The challenge for that is
Just pick and choose between what they're backing.
exactly,
Yeah.
and pick which cases you want to come into, not just invest in the manager. Now, the challenge with that, of course, is you need a team to originate and you need a team to underwrite, and they probably didn't have that capacity. So the need or the ask from them was, can you provide me with the 2 of the 3 things that you need to be a litigation financier that we don't have? And you need 3 things. You need underwriting capacity to assess which investments are good. You need capital. Well, they had that already. And they need origination, and that's the challenge, getting the investments in which to put your money. So what they were coming to me to do was to find, realistically, it was just the origination, the deals. But then as my team came back together, brought the team back that I'd had previously, we could provide the underwriting capacity too. So originally what they were doing was saying, can you give us deal flow? And that made me think, well, I've got lots of people that have got deals, and I've got lots of people that have potential want to invest. Shall I put them together in a marketplace? And that's where Lexolent started. But that isn't where it ended, obviously.
And the technology is an important part of that, isn't it? Because you could distribute deal flow in so many different ways, but it would be a lot less dynamic than doing it, expressing that through a platform.
Totally.
So perhaps you could explain a little bit about the platform concept.
So one of the initial concepts was something that I'd done when I started Vannin in 2010. We needed to generate origination. You do that by calling upon your network.
Yeah.
And really, Lexolent is simply an extension of that. It's a global community of people, whether they be lawyers or accountants or insolvency practitioners or recruitment consultants.
Because they're the front line, aren't they?
They just meet people that have those deals.
Yeah.
They refer them in. So that's the first bit. The second part is the technology, which is because we have a wide and vast network, and we don't want to carry a massive overhead of hundreds of people. And one of the things I was trying to change about the industry, one of the inefficiencies, is that we have to use technology to decide when a matter comes in from one of our members, which bucket does it go into? Does it go into our own bucket because we have our own fund? Does it fit our mandate or not? No. Does it go straight onto the marketplace? Is it just not a good investment, so we push it back? And so we use technology to assess, looking at the documents, looking at the information we received. Is it a case that where does it fit? Which bucket does it go into?
That's AI driven, or
it is totally
yeah.
Using an
you
algorithm.
Feed a lot of the case information through, and it can crunch and basically on metrics assess.
Yeah, and it can read the documents. I mean, these large language models are really quite incredible. I mean, I'm shocked every day. I look at. So that's only one part of the technology that we're using, but to triage, to assess which bucket the investment goes into is the first part. There's a part before that, which is scraping the internet to decide, are there investments out there or cases that have been issued in courts around the world that fit our criteria? And that's equally surprising. And the last bit being predictive analytics, looking at tens of millions of cases to decide, if you have this set of facts in this particular case, what were the outcomes before? What happened? Who won? Why did they win? What were the arguments?
Yeah.
And that's not to replace a very sophisticated and clever underwriting team, of which I'm not part, I might add, more intelligent people than me. But it's
the first screen, is it?
Well, it's another tool, isn't it? If you've got the ability, the human brain doesn't have the ability to analyze those tens of millions of cases. So the ability for a technology to do that is only beneficial.
And how do members interact with the platform then? Talk us through a journey of a professional like a lawyer you mentioned.
Yeah.
How do they interact with you?
So in a number of ways, but in its most basic and simple format, they would have a client who either doesn't have the financial wherewithal to bring their piece of litigation, or has chosen for whatever reason that they don't want to pay the legal fees themselves, which is equally sensible because they're very expensive and every dollar or pound you spend goes directly to your P&L, your EBITDA, so there is a reason that you wouldn't want to do that. They would have a client, they would approach us, they would put the case or the potential investment onto the platform. Our triaging system would say, is it one for the Lexolent own fund or is it one for the marketplace? Depending on which route it went through, we would then open it up to other investor members, subject to obviously rules on confidentiality and conflict. And potentially they would get offers to receive investment into that case. But
How much detail do they see on the case then?
Well, initially only the headlines, not the names, because obviously it's very confidential and we have to go through a very careful conflict process. But once they've been cleared for conflict, they could get as they would with any funder in any situation, they get right down into the weeds of what the case is about, what's gone on, what the information. So they get the full detail. But that's only one way. They would also come onto the platform to interact with other members, because we have different classes of membership, whether they be arbitrators or expert witnesses or barristers, who don't necessarily receive a benefit from putting cases on, but they get to showcase their talent and say, we're here, and interact, and there's a knowledge base, and they can be featured. So a number of different ways.
And for those that do put cases on, I mean, obviously for the litigator who gets his case funded, he's generating his fees, and that's helping him it proceed. But I mean, what other ways would, say, the accountant or others, professionals adding a case, benefit from the platform?
Well, the basis of the platform is that it's all on execution. The whole theory behind what we're doing is that we want people to get to the point where the case becomes one which is invested in. So the vast majority of our members receive a commission from the investor on the execution of the case. So they receive a financial benefit, and they then receive what I'd refer to as a carried interest or a profit share from the back end if the case is successful. And that's one of the incentives for our range of introducers and a range of members to send cases to us, because they receive financial benefit if the case gets funded, and they receive a financial benefit if the case is successful.
And then for the cases that don't make your fund, who would come in for those who are placed up on the platform?
A mixture. So we only invest in our own fund in English-speaking common law jurisdictions, because that's what we know. So if it's a cartel action in Italy or the Netherlands,
still a good deal, but
it could be a fantastic case, but doesn't fit our mandate. And that's a good point, because for other funders, they equally have a narrow mandate, and they generate, by spending significant sums of money on overhead, they generate cases. And what we're trying to express to them is that this is a place that they can then receive revenue from having that, paid that sunk cost, put cases on the platform for somebody else to invest in, because it doesn't fit your mandate. Now, the same with us. We generate these transactions through our wide and varied network of the Lexolent network. A large number of those won't fit our mandate. We put them straight onto the platform, and we offer them to answer your question, long-windedly, I know, traditional litigation financiers, people who would consider themselves our competitors but know what our mandate is. They have a wider mandate. They want to see our origination and our deal flow. Family offices, individual high net worths, hedge funds, a range of investors.
And the community aspect of the platform is important, isn't it? As we were saying on the top, you could distribute deal flow in countless ways. But what do you see the value of the community you're building, sharing knowledge, getting deals done, but doing it in a slightly different way?
I think the starting point there is there isn't a legal finance community. There's a lot of people that
doesn't exist.
It doesn't exist. So this is the first one. So it's a focus for that community. Now, where that goes, we'll find out. But at the moment, it's a place where legal finance professionals can meet other legal or finance professionals, not necessarily legal finance professionals, a mixture, to understand better and communicate and discuss the things that they find difficult or irritating or challenging about the industry. And having been on both sides now of the industry, where I've been in funds for 20 odd years, for the last 12 months I've been on the other side, which is trying to get deals done but not managing the money. And it can be very frustrating. The process can be very slow. So those discussions need to happen. What can you do? What you can change? How, those interactions need to take place to try and resolve some of the issues. So first of all, it's a hub for that discussion. Secondly, there are a lot of people in the industry that want to do more and more and learn more about how the industry works. So one of the things we're planning on doing, and we're opening up, is certification and education and e-learning to allow professionals to become legal finance professionals and give them some form of accreditation to say they actually do know what they're talking about. There isn't anything like that at the moment, so this would be the first occasion that happens.
And for online access means it's got a global audience.
Absolutely.
Rather than, and obviously this doesn't replace the conference circuit, as it were. There are key set piece conferences and events. We've got Dubai Arbitration Week coming up here shortly. I mean, it really augments the face-to-face, doesn't it?
No, it's totally complementary. Look, we talked about what happened post-pandemic. Everybody wanted to do a physical face-to-face conference, and that's possibly calmed down a little. But you can't beat that. The interaction face-to-face with people talking about things in person is absolutely the most beneficial way of doing what we do. But the constant contact and the ability to have a network and community which interacts with each other in the other periods is massively complementary.
And how scalable is it? I mean, I imagine with the AI solution crunching through all the deal flow, actually you've got substantial scope to scale up. But what do you feel the population and community could get to?
The answer is I don't know.
No.
I would like to get in my head to 10,000 members. We're at 1,000 now. We have law firms and individuals, and if you bring on a law firm, obviously you bring on many more individuals as part of that. We're starting next year with a bit of a push in terms of building the membership, but that's because we're starting to take our technology, which we've just launched and is being tested. There are many different parts of that technology which we're then going to offer in terms of software as a service to our members, whether it be on a free or a freemium or a premium basis, to get access to all of the things we just talked about, whether it be the predictive analytics, the AI, the case management system, all of the things that we're doing. So there's a big push going to happen next year, because it's very difficult to set a platform which people can't log into. Once they can log into it and see it and see their dashboard, it's a much easier sell, if you call it that. So next year,
the deal flow starts to come.
Yeah,
and that creates
absolutely.
Without that, that's the oil through the system. Isn't it?
It is, and the deal. I mean, we've done a lot of deals, but the reality is that until they can actually log in and see the system, it's a bit too virtual, if I can call it that. Going forward, when they have their own dashboard and they know what's happening, they can see the deals they've talked about, see the deals they've logged in. It's a very different proposition. So next year there'll be a big push on the sales side.
And we talked about the challenges of origination. So in the previous world, as it were, pre-Lexolent, where would people have spent their time and money trying to originate? I mean, we've talked about the value of networks, but what physically would they be doing?
Well, usually going out for long lunches.
The
reality is you pay ex-lawyers to go and talk to their previous colleagues, take them out for lunch, ask them
Wining and dining
to give you a deal. And all right, they come to. I know that's probably being a little rude, but the reality is that's the most basic form of business development. There's nothing wrong with that, I might add, but it doesn't need to be done that way. And if you encourage people to think about things in a slightly different way. So all we ask people to do is to say, do you know somebody that might be involved in a legal dispute that might want a different way of paying their legal fees? It's not a hard sell. It's a very simple discussion. And that's how the community works. It's a conversation. You know, is there a way you can do this differently? We talked to, and I've been pushing this for 10 years, the conversation about large corporates wanting to use legal finance as a matter of choice rather than necessity. The problem with that is the cost of capital isn't always the right price. But it's something we've been pushing for years, and there still is a significant ability for corporates to use legal finance out of choice. The majority of it's still out of necessity. So back to your original question, it's lawyers talking to lawyers about potential deals where, but for the investment or the money, the case wouldn't be brought. That's in its most basic form. But I'd like to think we've taken it to a much broader audience.
More scalable solution.
Of course, yeah.
And in terms of on the corporate side there, I mean, does this kind of finance unlock the opportunity for these David and Goliath type battles where it does provide the opportunity for the smaller company to actually fight battles that they just couldn't otherwise? It
does. It gives new startups that are being crushed by existing players in the industry the ability to level the playing field. It's the supposed ESG element of litigation. Legal finance has been using that for a number of years. David versus Goliath is a good example, and that's really where originally it came from. It's the idea that you can level the playing field, if we can call it that, by you have a defendant that's adopting a scorched earth policy in terms of significant legal spend to bury the opponent so that they can't be successful. It's an age-old legal tactic, probably not just legal. The reality is, if you have somebody that's going to write a $10 million check to help you fund your legal fees, then clearly your playing field is leveled, and it comes down to the law. I think you've got a good chance of success, don't they? Based on and so absolutely, that's a really big part of it. That said, it's not the only part of how this works, but it's a very important part of it. Access to justice. And what's your track record in these cases? I mean, perhaps if you're an investor looking at it, how are people thinking? Well, the first thing is that you should win more than you lose. But the reality is, Look, litigation finance is probably and this is a point of the inefficiencies of the system. For every 100 potential transactions that we look at, we probably only look at really seriously at 3. So you throw away 90%, it's 97%.
Yeah.
And that's not because 97 of those 100 cases are poor cases. They just don't necessarily fit your mandate. And that's one of the reasons why I'm encouraging other funders to come onto the platform, because of that 97, maybe 50 are a good investment, and they can make money and revenue having sunk the cost into generating them. But that's not what you asked me. So the point being, you need to be winning more than you're losing. The majority of funders in this industry are winning somewhere between 80 and 90%, certainly over 75% of the investments that they make.
And within the Lexolent fund, do you have rules around concentration of when you're looking at how do you determine what investments go in there, and what are the guardrails, I suppose?
So as with any of these funds, you have specific concentration risk and rules on what you should do. So you wouldn't put more than 10% of the fund into any one case, and I mean that's a high bar. We wouldn't go anywhere near that. Equally, you wouldn't want to invest solely in cases in Indonesia. Not because I have
jurisdictional
diversification. Not because I have a problem with Indonesia. Just an example. The reality is, you have usually in a fund in the mandate in the placement memorandum, and certainly in ours, we can only invest certain percentages in certain jurisdictions. Now, given that our mandate is English-speaking common law, that gives us the offshore territories, the UK, Australia and the US. So outside of that, we can make investments, but they have to be much smaller. So, and we have to, you wouldn't put all your money into, not just jurisdictionally, but into a type of case. So you wouldn't put all your money into patent cases or to collective actions or to anything else that, clinical negligence, for example. You have to spread your investments so that you have a broad-based portfolio. And whilst I started off by saying none of these cases are affected by what goes on in the outer political world, the reality is you don't want to be at risk for legislative change or something like that. So you have to make your investments in a range of jurisdictions, a range of size, and in a range of types of case.
And anecdotally, people would say the US is, it's a litigious place. There's a lot of battles going on there. Is that the biggest market for litigation? For the cases that originate, where are the top, out of the jurisdictions you mentioned, where does a lot of the deal flow come from?
I mean, you're right. The US is $450 billion a year spent on litigation. So it's a very litigious arena. But funnily enough, the amount of those cases which is funded is still less than 0.5%. So that's quite a big market for any fund to go after. And there's a range of reasons, primarily understanding and knowing about litigation finance. That said, in terms of the platform, probably because we started in the UK and in Dubai, and because our networks are focused in particular areas, the initial origination and referrals, because of the people that came on to start with, kind of match that. It's growing, and the US is becoming a significant. It's becoming. And what we're doing is we have a big push going in the States next year. And you're right, the US is a massive market, and we need to be doing more. But that, at the moment, it's a function of our networks as it is.
Absolutely. And in terms of the offshore financial centres, Channel Islands, BVI, what kind of cases might come out of there? Might it be trustees with clients looking at
a mixture? There's a lot of insolvency work, because there's a lot of structures there. Seeing an increasingly large number of crypto claims coming out of those jurisdictions, again probably because of the structuring. But equally trust work, where you have a dry trust that doesn't have liquidity to be able to bring litigation, but there is fault somewhere. So negligence claims for dry trusts but for funding they couldn't bring the claim. So that's quite a big thing. But at the moment, probably insolvency and crypto is the biggest thing coming out of BVI, Guernsey, Jersey.
And what might a crypto case look like?
A lot of fraud. A lot of fraud. People that have set up a scheme and stolen money. And the assets are all around the world. But the structure and the setup is in one of those jurisdictions. So you have again, out of insolvency, so you have an office holder, a liquidator that's been appointed, and then they're looking at, was there a fraud? Where did the money go? Where are the assets? And tracing crypto is becoming something that people are becoming very good at, I think.
And we mentioned at the top importance of diversification, say looking at the family office sector. So obviously with your platform, they can pick single cases that perhaps don't fit your parameters. They could go for your fund for diversification. Overall, how
there's a mixture of opportunities, and actually that's a really good point.
Yeah.
So we have the main platform, which is the cases that we don't put into our fund, but we put them straight out to potential investors. Now, the investors on that platform tend to be more traditional investors in litigation finance, historic LPs or funders in the market, or sophisticated family offices that know the space. The cases that we put onto our trading platform, which are the ones that it's effectively day two, so we invest because we like it. We then put it on the trading platform. We open it up to investors to either take it as a secondary trade, buy a piece, syndicate, or increasingly, which is really interesting, what we have is a number of they're relatively sophisticated high net worth, ultra high net worth, single multifamily offices that are almost copy trading. So what they're saying is, if you're doing a 10 million line into this case, we'll take $1 million, we'll take 10%, because
they'll follow you in.
They're following you in on the basis because we're giving them a pre-baked investment report, and we're going in anyway. It's almost, if I can use the phrase, a bit like eToro for litigation finance, so copy trading. And that's becoming really interesting and much, gaining real traction.
And in terms of your charges and fees, I mean, perhaps you could talk through on the fund, but then also these direct investment opportunities. When do people pay? Yeah,
so, I mean, each case is probably bespoke in terms of the buy-in, because it will depend on, if we're doing it day two, yes, we've done the due diligence, but it's not really moved very far. If they're coming in day 365, it might have been de-risked, so the price of entry is going to be a little bit higher, but not ridiculous. In terms of the platform, our members receive the execution fees as a percentage of what the facility is that we've granted. The platform charges 2%, and we split that with the introducer. And we tend to charge a 5% fee in terms of profit share of the investor's profit after everything they've paid out, including due diligence. And we split that with the people that bring us the case. So it's totally transparent.
Yeah, all aligned as well.
All aligned. Everybody's aligned. And if the case wins, we make money, as does the introducer. If the case is executed, which is a starting point, that gives the incentive to these people, our members, to bring cases onto the platform. And there's a lot of cost in generating deals, putting them on, underwriting. So it's only right that they get paid at that point.
Great. And just as we wrap up this conversation, what are the key takeaways for investors looking at this field and how they could access your platform and work together?
Well, it's an uncorrelated asset class. Yeah. It doesn't get affected by all the things we talked about earlier. The returns, in essence, we often compress the reality. We don't tell investors how much you can make, because sometimes they question, is that possible? But you only have to look at the publicly listed funders to see their IRRs are between 30 and 100%. So this is a good way to make money if you're an investor. The asset class is difficult to get into. It's been solely historically for specific investors who have the ability to access it via their alternate investments, but difficult underwriting, difficult access, paying management fees, LPGP structures, which are reducing their profits and paying carry to those investors. Here, you can come direct in. You don't have to be in a structure. You can make a single investment. Obviously, you have a certain element to pay in the execution and the carry, but other than that, your overhead's your own. Or you can simply come in and copy trade and take the risk with us. So I think what we're doing is providing an agile and easy solution for people that want to get exposure to litigation finance that perhaps otherwise wouldn't have been able to do that.
Okay, thank you. And the key messages for intermediaries, for professionals that are working around clients who have cases like this, what's your message for them?
I think this is a receptacle where, instead of going to individual potential investors, which is taking you 15 or 20 meetings, put it on the marketplace. Put it on the eBay or the Amazon of litigation finance, and in a controlled, measured, confidential and conflict-free method. I mean, obviously it's not a free-for-all, it's very carefully done. You get access to 15, 20, 30 different markets that you that might invest in your potential case. Where else can you do it? There's nothing like Lexolent in the rest of the world, so it's easy access. And it's not exclusive. So you can still go and do your 15 or 20 meetings if you want to do that. Come to us. We're not, you don't have to be exclusive. You can do both.
Fantastic. Well, look, Nick, great to talk to you, and we look forward to sharing this interview.
Thanks, David.